So today we are going to learn the limited company accounts. Limited company accounts meaning is that the word limited meaning as a limited liability. So the owner, whoever make the investment in the business, is responsible or liable to pay the amount whatever they have invested. They don't care about the other debts of the business. So when we talk about the limited company accounts, is going to be divided into shares. So share is actually what is a small segment of the total investment. So here under share capital, okay, so share capital is having these the categories. So first one is that the authorized share capital. So authorized share capital is its meaning is that the company regulatory authority of any country, okay, they are allowed to offer the shares at maximum level. So this is where the maximum limit of the shares issuance. Then we go for the issued share capital. Issued share capital is that you can offer how many shares, okay, to your to the shareholders to make investment. This is just the offer from the business, okay, to make the investment in the business. Then after that, after receiving the applications, okay, the business is going to decide about it to whom they have to give the application, approve the share application. And here is also they're going to check about that the financial position of the person or individuals, and they're also going to check whether the forms are complete or not. After doing all this scrutinization, they will go for the called up share capital. Called up share capital, they're asking the shareholders to make the investment into business. So whatever the money they have collected, the business has collected from the shareholders, we see as paid up share capital. So called in arrears is what the amount the business has not collected yet. So if I'm going to elaborate it, okay, so authorized share capital we say as 1 million. Okay, so when we run the business, okay, we are not offering 100% shares to the general public or any other person. So we are going to offer maybe as 700,000. Okay, so after issuance of these shares, we receive the applications, and after checking a verification, okay, we are going to call for the investment as 500,000. So 500,000, okay, after 500,000, all investors, they are not going to pay money on time. Some people, they still need to pay out the money. So that amount we call as called in arrears. Suppose in this business is that 50,000 still in arrears. We have approved already. We asked the people to make the investment, but they did not pay yet. So that's all about for the share capital. Now we are going to talk about the shares. Shares are having two kinds. One is that the preference shareholders. The second one is ordinary shareholders. So preference shareholders, they always get the priority to get the return from their investment. So most of the times, okay, these preference shareholders, they have the fixed rate of investment. Like here, I mentioned here the 5% preference share capital, meaning whatever the profit is there, they are going to get 5% of their total investment from the business. That's a fixed amount. If the business sometimes, okay, the business couldn't get the enough amount, or maybe they will get this 5% of the amount, this amount must be divided or must be given to the preference shareholders. So ordinary shareholders, they don't have this priority. They are not going to get the money from the business as early, but they will collect the money after the preference shareholders. And they are also not going to collect the fixed rate of dividend. Their dividend is always changed, depends on the company's annual general meeting or the company director's decision. Then we have the debentures. Debentures are actually the long-term loans. Okay, so the loans we can take from the financial institutions, but these loans actually we taken from the shareholders. So shareholders, whatever they give the loan to the business, okay, so they are going to take the interest on debentures. Interest on debentures treatment is the same as the interest on loan, and that amount we are going to show in the income statement. Then after preparation of the income statement, we go for the profit and loss appropriation account. Profit and loss appropriation is here we are going to talk about how much the profit is going to be divided among shareholders. So whenever we have this one, the profit for the year, so our priority to pay the money first to the preference shareholders. So preference shares dividend will be subtracted first. Then after that, whatever the amount is left out, we pay money to the, or if we have any general reserve. General reserve is actually the business is going to put some reserves to pay off all the general expenses. Maybe the business will face any financial issues in future. So the business is going to keep some amount as reserve. So these reserves are called as general reserve. So after this one, we are going to pay, or we are going to subtract the amount for the general reserve. Right after that, we are going to pay money to the ordinary share dividend, or ordinary shares holders in terms of dividend. So these two amounts we are going to subtract it here and from the total amount. So whatever the amount left out is actually our retained profit for the year. So this one, retained profit brought forward, this is the start of the year, what was the amount. So retained profit can be plus, can be negative. So if it is on the debit side, definitely it's going to be subtracted. If it's on the credit side, it's going to be added. So after addition or subtraction, whatever the amount left out, this is our retained profit carried forward. So another important thing, okay, under the company limited accounts, we also need to learn about the statement of changes in equity. This quickly you can get the idea that how much you're going to have the total investment, how much you have the general reserve at the end of the year, or how much you have the total retained earning. So the pattern is basically available in tabular form. So we start from the balance brought forward, all the opening balances we record it here, and then we make the total here. Then we have the profit which we get from here. This is almost exactly same. So here we're going to have the profit. Then after that we pay money first to the preference shares holders in terms of dividend if we have it. In this case I didn't put, this one is for ordinary share capital. So then after that we subtract the money for the general reserve. This money will be subtracted from here and will be added to the general reserve. Then we have the dividend for preference and all. Okay, so all this subtraction will be done. We are also going to subtract from here. So this is the closing balances of share capital, general reserve, retained earning, and the total here. So when we talk about the dividend, dividends are having two kinds. One is that the interim dividend, another one is the proposed dividend. So proposed dividend is that in the meeting we decide about it, that how much we are going to pay money to the ordinary shareholders. That's called as proposed dividend. Interim dividend is that if we are going to take out the whole amount from our business, so the business can be can face a problem of liquidity. So to avoid this situation of liquidity, okay, so the business normally what they do, they are going to pay money of dividend in terms of 2 installments or 3 installments. So this is the half payment, okay, interim dividend is that the half payment we are going to pay to the shareholders. Now we are going to talk about the statement of financial position or the balance sheet. The upper part is exactly same as what we learn under sole trader or the partnership business, but the bottom part, the equity part, okay, we will have the title here as capital and reserve. So we're starting from the preference share capital, and we should have before this as prefix about the percentage, how much we are going to pay. Then after that we have the ordinary share capital, then we have the general reserve, retained earning. All these things actually will come here, the closing balance sheet. And then after that we add together, and after adding we will get as shareholders funds. This amount must be equal to our net assets. And that's all about for this chapter. Thank you for watching this video. Take care.